So this is a thought process I had while going through all of that, like the 2018 to 2019, and I came up
Hmm.
with this slow flip strategy. So,
Okay.
I mean, a lot of people say like flip 3 houses, flip 5 houses, hold one. You can do that.
Yes.
And then that's especially if you need the money, flipping and wholesaling or commissions, like you just have to do it. You got to eat, or you got to have a W-2 job. Um, so you keep doing that. But we realize like most of our, if you take a 5 or 7 year period of holding a rental, for us, like let's say this year, we sold one. Actually, we sold two this year. One, we netted around 80 grand, and the other one around 65 grand. And we both of those we held in less than 4 years. So around the 5 to 7 year mark, it's roughly the way we were buying them, appreciation and all that stuff. It was around 100 grand gross profit. So say that works. That means if you can buy one today in 5 years, you'll have 100 grand gross profit. So just start buying one now. Next year, buy another one. Next year, buy another one, and then keep flipping and wholesaling and working your job. That way, once you get to the 5 year mark, now you could technically sell one a year and you got an extra 100 grand. And you could use that money to go out and not buy one, but buy two. So that way you're exponentially growing your portfolio. So it's kind of like the BRRRR strategy, just I call it the slow flip strategy because you are selling them at some point, but you're using the proceeds to reinvest and exponentially grow your capital. I've got a cool presentation on that, and it's a plan of action, and it lays it out and it shows you like how quickly it is to build a $1 million rental portfolio. It doesn't take as many properties as you would think.
That's really cool. It's definitely slow, right? Because it's 5 years, but I mean, 5 years is going to pass anyway, so you might as well have that extra rental or that you can sell in 5 years.
Yeah. Who wouldn't want a rental one right now that they could sell? They bought 5 years ago that would make them an extra 100 grand.
Actually, bought one 5 years ago. That would have been 2016. Yeah, that would have been pretty nice. Pretty nice, especially now with where the prices are and the market's going. Well, any reason, if it's too personal, you don't have to share. But any reason you decide to sell those two rentals, or was it for this strategy?
One, we never intended to hold it anyway. We
Okay.
bought it because we got a killer deal. It was a flood house, an investor got foreclosed on. It was a Harvey, so that huge flood incident in Houston. We bought it for 120. It was fully remodeled. We just needed to put an AC unit in it and do like a couple of small things, but otherwise fully remodeled, 120,000, 3,000 square feet. Now,
Wow.
so we underwrote
Okay.
this property that it was worth 190 at the time. So we had plenty of spread there. We knew we could rent it for about 2 grand a month, which we did. So from a cash flow perspective, even after flood insurance and all that stuff, like it was a great deal. If that house hadn't flooded, it would have been worth well over 300. Well, COVID happened and the market just goes crazy. And the tenant that we had in there, like, she was a big pain in the butt. So we're like, one, like, we're definitely getting her out. And so if we're getting her out and the market's going crazy, hey, what do comps look like? And I looked up comps, like it was worth 190 when I bought it. Well, now one of the neighbors got like, I think it was around 300 for his, and his flooded too. And so we're like, hey, if we can get anywhere near that, we ended up getting 255. Not bad. I tried to get more, but not bad. In 1 year, basically like 14 months, 15 months or so. So that's that one. The other one was a duplex. Not similar, but it was another one that it from a value standpoint, it was really worth nothing to us because it was in a flood zone, even though it didn't flood. It was in a really bad area. As far as it was just very run down. But it was a duplex that had been built by the previous owner, and that thing was cash flowing like crazy day one. So we bought it based on cash flow for 70 grand, and we thought it was probably worth 70 grand at the time. But from a cash flow perspective, post COVID, we're looking at this and we know what people are paying for cash flow. We're like, man, we think we could probably sell this one for around 150. And we did. Or it was 150, 160. And that was around a 3-year time period. And then we just took that money and then we bought another rental at the end of December, single family rental. And then actually I did a case study on this one. If we would have flipped it,
Oh,
we would have
cool.
made 10 grand. We're going to hold it 5 years, and in 5 years, projected gross profit 100 grand. So,
Great deal.
bring it back to that 5 year slow
We
flip.
got the slow flip. Yeah.
Yeah.
We'll have to trademark that for you. Well, that's really cool. It's, just kind of pruning your portfolio, kind of selling off the losers and like the ones you don't want to deal with. So
Exactly.
that's a lot of money. That's really good money.